All right, I'm back, restarting the stream. Hope you guys can join me. Starting the stream. All right, we're back. Hope you guys followed in on the way here. I don't know if you guys followed in or not. Big Brother not liking you messing with their force. All right, are we back? Just gonna restart some stuff here. All right, we're back. Richard, thank you for the $5, man. Really appreciate it. All right, we're good. I shouldn't put so much trust into Google. I also have a Google router and Wi-Fi mesh network here, you know, and apparently they don't want me streaming on YouTube. My upload for some reason was way down. I was only at like 5 megabits per second, and now I'm back up to like 30 megabits per second for upload. I got about 300 for download. So hopefully that does a trick. It seems that you got to power cycle these things every week. You know, if you're buying a Google Home router, don't. It's not that good. Their mesh network's not that good. Time to replace it. So I definitely appreciate you guys sticking with me. Sorry about that. Had some like little technical difficulties apparently, but we're back now. Short Google. Oh, Richard, thanks for the $10, man. I'm gonna send Richard. We'll talk later. I'm gonna send you Illuminati's pizza for the amount of money that you donate here. You donate a lot of money, so I wanna pay you back. I will send you Illuminati's pizza. I'll hit you up on what's the best place to hit you up, Richard? Facebook or Discord or what? Let me know. Let me know. I will track you down, and I'm gonna send you Illuminati's pizza. John says my problem wasn't I didn't take profits when I should have, and you know we kind of getting back to what I was talking about is before we had technical difficulties is, you know, the market. T5, what's up? The market really changed the last few days here when we had less volatility. Yes, we had some nice green days here where we made some money the last couple of days, but when volatility really died down, if we're looking at like the VIX. All right, Richard, I'll hit you up on Discord. I'll get your information and I'll send you this. You know, when we're in the way that I played January wasn't the right way to play January, mainly because we were betting on volatility. However, if you look at January, volatility kept going down. Volatility went down. Yes, we did pop up here a couple days, but essentially, you know, ever since 35, 36, we've been just slowly going down. And I know that there's a lot of members that were making money hand over fist day in and day out because like the moves kept going beyond the expected moves, and there was a lot of great strangle plays. You could play the stock, you could play options safely. You could do a lot of different things, but when volatility dies down, you know, like if you're looking today, the S&Ps, if you're looking today, what did the S&Ps go? S&Ps point, you know, we're back to like 2017. It went up 0.09%. I mean, basically unchanged. I mean, the S&P is $2. Dow was down a little bit. But if you're looking here, like Facebook, 0.5%, Alibaba 0.3%. I mean, Tesla did almost like 2%. Had some crazy stuff there. You know, but strangles and stuff, and this is where it comes in, where you have to understand premium selling and how they make money and what happens. And when essentially everybody gets what's due to them. Eventually, everybody gets paid. Depends on how much pain you have to go through. So, like, if you're an option seller, you went through a lot of terrible times right in this. You kept, premium was fat, but the option seller kept getting screwed because it kept going beyond the expected moves day in, day out. It just kept going beyond the expected moves. And option buyers, which we were doing a lot of, definitely down in here, and ever since this cracked. But if you kind of take a look back into 2018, when we were having some moves up, you could see how slow and low we moved. Where the red days were red days, but I mean, it went from 28 to 28.14, and we thought those were pretty massive moves up until we got sort of these kind of candles. And really, what we have to prepare for a low volatility environment. Like right now, January, we had a rough go. We were betting on volatility, and volatility just got smacked. So what happens when the market changes and you lose money for a few weeks? What do you just keep doing the same trades, or do you change it up? And for me personally, you always have to adapt. The way that you traded this is way different than when you traded this area here. This one, you're betting on volatility. Here, there's like no volatility. I mean, if you're looking down here at the implied volatility chart, we're almost back down to these levels here when there was like no volatility. I mean, not as low as 2017. I think what's the lowest VIX got for 2018? All right, VIX got to 10, which is pretty freaking low. I mean, VIX got to 10 is like crazy. Also funny how we reevaluate on Friday in a month, but we may have more of this in store. No one knows. So, yeah, I mean, right now I'm a big believer in moving with the market and not trying to fight the market. Like, as traders, we're not big enough to like sway the market. We're not big enough to have an impact on the market. We're not big enough to, if someone says, "Hey, Nick bought Tesla stock," it's not going to do anything to Tesla stock. It's not going to do a single thing to Tesla stock. If Warren Buffett buys a bunch of Tesla stock, that moves the stock. So like people like me and most people in this chat right now, or who are watching this video, we have to move with the market. We can't fight the market. If you think that you're smarter than the market and you're betting against the market day in, day out, it may work out every now and then, but you'll make more money moving with the market. My biggest mistake is because of the current political conditions and our trade conditions and all that, in the Fed and all that. This recovery, I thought, was going to get faded back down. Like we were going to get faded back down. So I think my biggest mistake, even though the indicators were saying going up, my biggest mistake last month was, instead of moving with the market and sticking with the market, I was betting against the market, and that payday never came. And that's why we had a red month. Yes, we traded safely, and that's why we didn't lose that much money. But at the end of the day, a red month is a red month, and this is what happens. This down move was massive, this up move was massive, but it took a lot more time for this up move here. The main people who can change stock prices are activists, investors, and super rich people. Agreed. So as a retail investor or small investor or whatever the case is, whatever you want to call us peasants, is you gotta move with the market. I don't know why. I just thought we were going to get paid on it was going to go up, and we were just used to two-sided action. We were very used to two-sided action here. We had a couple months of two-sided action, very nice here, and then we stopped with the two-sided action. We made money on the way down, but it was harder, and then we lost money on the way up because we were thinking the pops were going to get faded, and we did make some money. The pops dropped a little bit here, but didn't really make a dent in the overall trajectory of this recovery to 2,700 here. And then, as you can see here, from November 18th to like January 29th, I mean, it was like a ghost town. It was like, you know, it was, Mark, yeah, I mean, I hate to break it to you. I mean, we don't have the trillions or billions to move the market. We just don't. We just don't. It's best to know your role. It's best to know your role so you can figure out how to profit off of other things than to, you know, live like you're something else. I know why we did what we did, wanted to go against the herd too much. Yeah. And meanwhile, premiums were fat, and they kept, as you can see here, implied volatility kept getting crushed. So even though the moves were pretty nice going on the way up, you know, implied volatility was going up, and then we have days like today where things are flat. I mean, SPY closed up 13 cents. The Qs closed down 71 cents. Alibaba 52 cents. IBM 32 cents. Netflix 35, only up 35 cents today. I mean, I think Netflix move today? Netflix made some moves, but I mean, if you're looking at the daily, I mean, it closed basically back where it started, 0.10%. I went with the flow, but killed me today was Amazon. Sorry, Jimbo. Yeah, I mean, Amazon, we'll talk about Amazon earnings. So, you know, looking back, you know, when you have a red month, you don't want to have, you got to be after you have a red month, you have to be very, very careful. Because after you have a red month, it's very easy to kind of spiral out of control and say, okay, I'm going to get it back all at one time. And you know what? Most likely, we're going to just go slow and we'll make it back over time. We're not going to try to do, I mean, we could, but we're not going to try to do like $2,000 trades or anything like that, or try to get sloppy, especially like after coming off a losing streak. You don't want to go like, okay, well, I'll just put $5,000 on this trade and get my $1,000 back. Sure, we could do that, but that could also turn horribly wrong. We could instantly lose on that trade 50%, and then we're where we're at after that, you know. Jeff Bezos lost $7.3 million today. Well, he's about to lose a lot more than that. Yeah, we were expecting the rejection at 2,600. That didn't come, so now we're above 2,600, and it still looks bullish. And you know, if we learned anything, if you guys traded in 2017, you know, 2017 really taught me a lesson in terms of how the stock market works, and I came to the belief that there's no top and that there's no bottom. There's no top and there's no bottom. So, you know, kind of what that means is, yes, we can go up for a long time and we can go down for a long time. And, you know, and despite what people are saying, despite what the analysts are saying, despite what top traders are saying, despite what I'm saying, you know, the market's going to do what we're going to do. And a lot of times we can't believe what the market just did. We're like, what the heck just happened? You know, but that's what also makes, you know, trading so much fun, so exciting, that every day, you know, we come in and it's entirely different every day. Some days are great, some days are disappointing. Scott, what does premium crush mean? It's when implied volatility goes down and the expected moves go down, and then the premium gets crushed. So when the premium gets crushed, it means the option prices actually become become cheaper. They decrease in price. If you looked at Tesla, I went over it yesterday. Watch my video from yesterday when we went over Tesla. Great example of premium crush on that. There are processes. Tops and bottoms are not a price. You know that, yeah. So I mean, I'm coming off January as a loser, and you know, you got to be careful that you don't kind of snowball this into like 3 losing months. And you know, it doesn't matter how good a trader you are. It doesn't matter how, you know, what it is. Anybody can get into a slump. You know, if anybody says they never lose, their day is coming. Their day is coming. Like, if you trade for a long period of time, we all have red months. You just don't want to turn it into multiple red months and red years. You know, you don't want a red year. Like, you have a red year, you know, might as well just not trade it at all, right? But if you have a red year as you're learning, I mean that's something different. But at this stage of my life, you don't really want you don't want this to snowball into something terrible. So we're gonna cut it off. So what I'm gonna talk about, I'll talk about Netflix in a second, Eric. What I want to say is what I'm gonna do moving forward. What I'm gonna do is where I made the most money this week is on trades I closed out intraday. As you can see, intraday we did have some movement. Like on Tesla, I made some money today. On this upswing, we made some money today. As you can see, Facebook, there was some movement today. Even though Facebook closed out kind of flat, actually Facebook closed out down 0.5%. I guess you can't call that flat. But Netflix, if you look at Netflix, we had a nice rise up here, but closed out flat. I mean, went up $10, closed down, and then yesterday I made some money on GS when GS was coming down, and then where I've been losing money, where I've been bleeding money is swing trading overnight. So what I'm gonna do is I'm gonna cut that. T5, congrats, man. I'm happy for you. I'm happy for you, really. You just T5, but because you've been winning so much, you gotta like I said before, when you're losing on a losing streak, you got to kind of sit back and reevaluate. What path are you on? When you're winning a lot, you got to do the same thing. When you're winning a lot, you got to sit back and say, okay, why am I winning so much? What's happening to the market? Because eventually that's going to stop. I mean, we had like 7 green months in a row, and now we're having a red month, and you kind of always have to be on edge, whether you're winning or you're losing. So yeah, Josh, right now I'm going to be most February I'll be concentrating on just closing things out intraday and not holding overnight, because the stock movement has not been gapping up. So when swing trading, especially if you're doing strangles, you make the most money on gap ups and gap down. And for months we were gapping up or gapping down almost every day. And now that has stopped, so you got to stop doing that strategy. So there's a strategy for different types of the market, and right now we have to adapt it to the market that we're in. And right now, based on my trading history, it's saying I'm losing money swing trading, so I'm going to stop doing that until I find that it's safe to swing trade again. It's not to say you should write that strategy off, throw it in the trash, and never come back to it. You have to put that in the back. There's a time and place to do iron condors. There's a time and place to do vertical put spreads or vertical call spreads. There's a time and place to do strangles. And sometimes you put strategies on the shelf for a while, they collect dust, and then you go back and you take them back off the shelf, and you're able to use those strategies when the market changes. And right now the market changed. January, the market changed. Started with real money 3 weeks ago, up 20%. Congrats, Mark. Sucks unless you get put up every day before close. Yeah. So Netflix. You guys want to talk about Netflix real quick here. I don't want to take up this whole stream talking about myself, but I also feel that I owe it to the people that watch this channel, subscribe to this channel, to kind of show you what's the real deal. Like, you don't want to, I don't want to come on. I don't want to do this channel if I don't tell you guys the truth. I don't want to do this channel. I don't want you guys to watch. Like, I don't like people that fake it till you make it, or whatever the case is. Options trading is a business to me. I own other businesses. Options trading is a business to me. And in business, sometimes you make money on the deals, sometimes you lose money on the deals. And right now, January, we're down, but that doesn't mean you need to have a bad year in business. Like, in business, you have bad months all the time. In business, you have bad months, but you don't want it to make it, obviously when you're having a bad month, like let's say you operate a business, when you have a bad month in business, you look back at that month, just like we're doing now, and say, what happened? Why did I lose money? Was an employee malicious? Did I lose a major client? Did I waste product? Did I Did I throw money down the toilet in marketing dollars? I mean, it could be anything. And that's the same thing. That's the same thing with option trading. Option trading is a business. When you lose money, you got to evaluate why you're losing money. When you're making money, you got to evaluate why you're making money. Same thing with any other business, whether you own a barbershop, t-shirt business, restaurant, IT business, whatever the case is, it's all relative. At the end of the day, you're doing something to make money, which is a business. So you either make money or you lose money. Just because you have a losing month doesn't mean you have to have a losing year. It just kind of, I just feel like on YouTube, most people only show the good side of trading and they only show the green side, and they don't really focus on when they lose. And when they lose, like, well, things got a little rough, and we'll just on to the next. It's gonna be a great day tomorrow. Have a great day, guys. And that I feel like, because when I was learning, when I was learning, kind of what motivated me to do the channel. When I was learning, I was looking at YouTube videos too, and I found that there was so much garbage out there, and people that weren't like real, people that weren't really. I mean, are you guys really trading? Or because I feel like you're like, oh man, I'm making money hand over fist and life's great. And sure, you could do that. I mean, we've all experienced where we had a great run and we're making money, hand over fist, and we're just hitting trades left and right, which happens. It happens. But then they never seem to highlight the days or the months or whatever when they lose money. So I don't want to do this channel if I'm going to have to tell you guys, if I only show you guys the good. Because, I mean, do you guys really benefit? Does anybody really benefit from just the good? Because I know on the other end, everybody that trades with us in the Discord or on Facebook, or anybody that's part of the UVH fam, we all have red days. I mean, there's no escaping it. Things are out of our control. We could have the best positions on, and then things out of our control, whether it's a news event or whatever the case is, we could have a great position on, all the charts and technicals and everything lines up perfectly, but then we get this curveball comes in and you lose money. And that happens to anybody. If you're trading day in day out, you're gonna have those instances. I think I'm going back to paper trading for a bit. I got too cocky and too aggressive, going in more than half of my portfolio. Whew. Yeah, Matthew, you gotta tone it down a little bit. You gotta be careful. The capital in your account, I've told you guys this a lot of times. The capital in your account is very precious. The capital in account, the people that you're trading against, or the machines, or whoever you're trading against, their goal is to drain your accounts to zero, make you have nothing. They get richer. Since you're a hat guy, I'm gonna get one made for you. Stay tuned. You've actually helped me become a better trader. T5, appreciate that. I love hats. I don't know if I know that Kit and I've seen a lot of people. Hamed has seen it, but I wore the Santa hat, and then they make fun of me because I wore the Minion suit on Halloween. One of the reasons I watch this stream is because you are so candid and you aren't posturing that it's really easy to make money. Yeah, I mean, I would say option. We may make it look easy. Some trades we pull off flawlessly. People, you could pull a trade off, sure, but I mean, it's not realistic when people to not have red or bad days. I mean, even I know that like major traders, I mean, big traders, well-known traders in the community. I mean, I know for a fact. I mean, they're losing 6 figures, 7 figures. They've had bad days like that. I mean, we're talking about losing $2,000. This is not good, but we're not talking about losing 6 or 7 figures. I was killing it every day in December, and first half of January started more than half my money. I had Tasterworks. Yeah, and that's why when you're winning a lot and winning big, you have to be very careful. It feels good, but then you could have a lot of capital up, and then the market shifts, and then you immediately get screwed. And I've shown this chart before. I'll go over it again, because this one caught people off guard like crazy. let's do, man. So this, if we need how many we need the minions. I may or not have been this. Yeah, you guys got the minion screenshot. You could check the black market on Discord for that bad boy. Okay, so people probably still have, you know, PTSD from this, because this one, and what's also very interesting is January of 2018. I had one of the biggest months in my trading career, and because we kept gapping up big and we were going up every day, it was pretty easy to nail targets. But this one caught people off guard, where people lost a lot of money. And this is what happened in 2017 leading up into 2018 here. And pretty much 2017, very low volatility. As you can see, these candles are so small, not compared to what we're dealing with lately. And these candles, we were just going up, pretty easy, just buy the dip, hold. Really, I wasn't doing a whole lot of buying options. I mostly sold premium, and I put the positions on and I left, and that was it. Like, I would just put the position, because the market wouldn't move during the day. I would literally put positions on and then just leave the rest of the day and do something else, because literally nothing was happening. Well, welcome to options, Luke. You know, nothing was happening. And if intraday, you know, we're talking about no movement. We're, you know, S&Ps, I mean, it closed up 0.09 a day, like that kind of movement. 0.10, 0.25 was very common. And people kept shorting the market. We kept climbing higher very slowly, and it was like the longest slow bleed for shorts ever. And we kept going and kept going and kept going, and people kept shorting, and their payday never came. And eventually, you know, you get switched to a long position. People, because you after losing for 5-6 months shorting, you switch long because you're like, I gotta stop doing what I'm doing. I'm gonna switch sides. So you switch sides, and you're going up, and it's going well for you. And you're making money. Things are going well. And then this is what I always get concerned about, these big pushes up, like these big pushes up or these big pushes down, because it just gets violent. And then starting January, the very first trading day in 2018, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 2-3 weeks straight green. And I'm not talking compared to these green bars. If you're looking at these green bars, these ones are much bigger, you know, compared to these green bars back in October. You know, we had a nice run here, and then we even had a bigger run up here. And for shorts, this was literally face ripping for them. This was after a long year in 2017, they're greeted in 2018 with face ripping. Like, people couldn't understand why the market was going up. Like, why was the market keep going up? Why do we keep going up and up and up and up? So then people started loading in long. Let's catch FOMO. This is like kind of like Bitcoin, right? We're gonna catch FOMO. We're gonna hop on the train. We're gonna do that. And then one day, the train stopped. Everybody got off, and we went from 2,800 down to 2,500 in just a week and a half in terms of trading days. And people their mentality was buy the dip, and they were buying the dip, and they kept losing. And then, you know, they kept losing, you know, was bleeding them out. Obviously, the best thing to do in that circumstance was to stay patient. If they did nothing, they would have been rewarded, because we were back up above all-time highs again. But then we were greeted up here like 2,900 with another sell-off. So, you know, I say that because the market changes so abruptly, and you just have to be very careful that, especially when we're having these major legs up, like when Amazon's going up so much, like, does it really deserve $1 trillion market cap? For at this point in time, do these valuations make sense? These valuations make sense? Does Apple deserve to be a $1 trillion market cap? I said this like a couple days ago. And, you know, after it was like 2 years of not seeing volatility, we finally saw volatility and nobody was prepared for that, because we could have gone years of no volatility. And as you can see here, I mean, we went from no volatility to this biggest increase here, and we can see what the VIX was like. You know, the VIX went all the way up to 50 before coming back down, and that was way higher than when we experienced 35 just on this major sell-off. Like, it made it look like nothing because it was so unexpected. I mean, options were up tens of thousands of percent. You know, it was nuts. You know, puts were crazy. You know, if you weren't protected, you were getting wrecked. And you know, so the market, you know, I give you that example to show you that the market does change. It just doesn't, it doesn't give you any warning signs. I think the warning sign should have been like probably the warning sign, it's more of a joke, but if we're grinding up here, literally every day in January 2018, Trump was tweeting all new high, all new blah blah blah, and like when the politicians hop on board, you probably should get off. And then what's his name? Trump tweeted Dow above 25K again, and then, you know, it's at 2501 right now, 25,001. Yeah, you know, it's like when politicians start hopping on board and start taking credit for the market, it looks like experience is telling us to hop off. But in terms of the market right now, we have to think about is the Fed was doing us some favors in terms of options traders with bringing interest rates into the market because it was creating more volatility for us. Now we have to be very careful because the Fed got scared. They're like, whoa, we're like nervous now because we put some rates in. The market started going down. Now we're like, so right now the market has the Fed on a leash, you know? So you got to be very careful about that. And also we got to be careful going into the 2020 election. You know, we need to be very careful. We could literally just slow grind our way back up to 2,900. We got to be very careful. Trump is blowing the horn right now, so get out. Yeah, that's what I'm saying. Like, you gotta be careful. You know, and for the Fed to back off, I didn't think the Fed was going to back off because they were giving the middle finger to Trump, and Trump was threatening the Fed, and the Fed said, we don't care what you say, we're going to do what we want to do. But then at the end of the day, the Fed comes through and says, oh no, we're gonna take a seat back because, you know, we're just gonna keep an eye on the market. You know, we're a little nervous here because, you know, we did go down a little bit here, and, you know. And at the end of the day, I think the market, you know, my personal opinion, I think the market needs a reset because it's just like, you know, I mean, how high can we go? I mean, if we're looking at the, let's go to, you know, if we're looking at the market here, can we go back further, please? If we're looking at the market here, in the 90s, you know, if we're looking at the 90s here, you know, the 90s was a great time to invest because all these tech companies were coming out, all these well, they call them unicorns now. I don't know what they call them in the 90s because I wasn't trading, but everybody knows all these hot tech companies are coming out. It kind of sounds a lot similar today. All these apps are coming out, and all these IPOs are coming out, and we got Uber IPO, and we have Lyft IPO, and we had Blue Apron, and we have all these people coming out. It sounded a lot like back in the day where we had, you know, we got diapers.com, and we got, it was the .com boom. So you had diapers.com, and you had eBay, and you had Amazon, and these are the companies that exist. But there were thousands of other companies that didn't make the great purge of 2000, 2001, you know, and the market was going up and we had all these crazy evaluations. And I'm not saying that the market's going to crash or anything, but you kind of have to look back and say, back in the 90s and 2000, late 90s and 2000s, we had an epic surge. You know, basically, I mean, this is the S&Ps. It went from 600 to 1500 in just in 4 years. I mean, it doubled in 4 years. And why did it double? Did something crazy happen? Is it just because all these companies, you know, things were hot, or what exactly happened? And then we went up crazy high, and as you can see here, back in 2001, 2002, we're now back down to 760, 700. You know, one as high as 1500. It got cut 50%. 50%. Can you imagine right now if we went from 2700 down to 1350? I mean, that's what I'm talking about right now. It literally went from 20. It would, like right now in today's speaking, if this happened, we would go from 2700 down to 1350. And that doesn't mean you should go like, I'm gonna put my tinfoil hat on and start shorting the market tomorrow, because that's probably not gonna work. You know, but at these evaluations, you kind of have to think about, if you're a long-term holder, like, okay, we just had a crazy run. Like if we're looking from 2008, you know, if you're looking from 2008 or 2011 more, let's say more 2011. I mean, if you're looking from 2011 to right now, let's go to, well, you know, talking about the same thing here. You know, 2011, 2012, 1400, 1343, 1350. We'll call it 1350. Up to 2700 now. Like, can you imagine we just go back down to here like a year? You know, but that's kind of what I'm talking about. That's kind of what I'm talking about. PayPal IPO 98, yeah. Do you think playing straddles is a safe way to lower risk? Billy, I don't think so right now, because premium keeps getting crushed, and when you put a straddle on or a strangle, that premium just keeps getting sliced through, man. I've been playing a lot of strangles and they've not been panning out. And yes, I could push them out further if I want, but I feel that if I do push them out further, I'll be paying more, and that crush is just gonna be more aggressive. So I haven't been doing that. So I think right now I'm going to just play it slow and trade intraday, just like one stack at a time, until we figure out, you know, where the market's gonna go. Apparently the market wants up, you know. So far, you know, we got about 13 minutes left on this channel. I know that I've been just ranting a lot. So if this video was of value to you so far, push the like button. If you guys have questions, let's talk. Eric, I didn't forget about you. Thanks for the reminder, though. Let's do Netflix. If you guys have any questions, let's cover those now. Let's talk about Netflix. I think Netflix has to digest this move, and if you're looking here at 339, you know, we're kind of just back in the middle. It's a little bit above the middle, but we're kind of back in the means of where it was. I mean, it went from 423 down to 231. We had a crazy, that's a crazy swing. You know, it lost 200 points within how many months? We had 1, 2, 3, 4, 5, 6. But that's kind of where like 6 months. But that's kind of where I'm talking about, where Netflix was just ripped from 230 to 423. We're just thinking like, you know, we were making some money in there, and I just think to myself, like, this is not right. Like, that's not right. And eventually, you know, that comes to fruition. Like, when there's crazy runs and there's crazy drops, just know that there's gonna come a day where people are gonna have to pay for that, and it's not gonna be pretty. You know, people get greedy. You know, it goes like, people were saying from 240 to 423. You know, Netflix business didn't change that much between 2 quarters. Is that enough to justify doubling their stock price? I mean, I wouldn't be surprised if we go up to like 380. I would actually like a run to 380 and then maybe back down to like 320. and keep that. You know, I think these valuations are just crazy right now. But like on the way up from like 200 to 423, people were like, "Oh, Netflix is going to be a $1,000 stock," you know, before 2019. Except they went the reverse way and got a 50% haircut. You know, it's like you got to be careful. You just got to be careful, especially with Netflix and these companies that are so in debt. Do they deserve to go up 100% in a couple months? And then when it goes, but that's the thing. It can go up 100%, but can only come down. It came down 50%. So if you're doing math, you know, you're not going to lose. But you just gotta be careful. Amazon, the same thing, Jimbo. Amazon, I think right now we're feeling the effects is because earnings hasn't been that good. Yes, Amazon earnings were great. But what they say is the guidance. You know, Apple lowered their guidance, Amazon lowered their guidance. So if you're sitting back thinking here, you know, the stock price isn't reflecting the future yet, I don't think. So far, a lot of companies are saying, you know, including like JP Morgan. JP Morgan was saying that, you know, they're concerned about the future and they're concerned about, you know, financials, and not a lot of people were trading because of the volatility. Not people weren't investing in the market, you know, things like that. And you gotta think ahead. You know, right now, what makes me kind of nervous on this Amazon chart is just the declines on the tops here. Double topped here at 2050, and then we keep making lower highs. So this high here is like 1840, and then we have right here is like 1789, and then this high right here is 1775, and then we have this high here, which is like 38, and now we're down back to here. You know, definitely wouldn't be surprised to. I mean, it's hard to say what Amazon will do because it's such like a cult stock. Everybody wants to own Amazon stock, and I honestly think that Amazon should probably come back down to 1,000. Like, this is like insane. You know, Amazon, I mean, in the last 3 years has gone from 474 to 2,000. Yes, their business has expanded. Their growth has been amazing. I mean, I'm all aboard Amazon. I like their product. But am I going to buy stock up here? Am I going to buy stock at 1,600, 1,700? I'll buy stock at 1,000. You know, I think I would like to own it like 1,000, and then for like a long-term hold. But it just, and as you guys can see here, that you know, this went up a lot. It went from 474 to like 800 in a year, and then it went from like 800 to 1,200 in a year. So it went up 100% that year, and then it went up from, what was it, 700 to 1,200. So then it went up 50% that year, and then it went up last year. It went from 1,200 to almost 2,100, went to 2,000. So it went up another 100, almost another 100%, and eventually that stops. And so far, this chart is in a descending pattern. Whether, you know, doesn't matter what you think about the company, the pattern is the pattern, and right now it's descending, especially with this latest smackdown with earnings. This earnings had the potential to break out above 1,800, which would set it back towards its path on 2,000. But because it got smacked down hard, you know, it kind of makes you think. Now, you guys know that Wall Street runs on greed, and the market's not fair, and you know, Amazon can keep going up and we still may not understand it. And you know, the market's not rational. It doesn't care about your feelings. It doesn't care about your position. So you just got to trade accordingly. ALXN and Roku. If you Tobin, if you believe some companies deserve a haircut, which companies are you thinking about shorting? Tobin, you got to be careful. I shorted all January, and I paid the price. So right now I'm just taking it a trade at a time. I'm not going to, you know, I'm not going to get crazy with it. ALXN, I would be very, very careful right here at like 129. So right now I would wait for it to get to like 129 and see what happens, because each time it comes over here is getting some hard rejection areas in recent months. You know, these guys look like they have earnings coming up, right? Yeah, February 4th. So, you know, earnings is going to tell us what's going to happen here. Is it gonna be able to break above 130? So back on its path up to 52-week highs here, or is it going to get smacked down? And right now, earnings haven't been that impressive. And also, what did the banks do today? I didn't even look. Banks closed down. So the market was going up a lot yesterday, and the banks were ripping down like 3% and 3%, and GS went down another almost 1%, 0.74%. So you got to be careful. A lot of mixed messages in the market right now. What gold do? Gold was down a little bit. Oil was up. I mean, S&P is literally zero right now. Zero unchanged right now. Net change zero. Crazy. I don't know why I went to GE. Roku. Roku. I think Roku's chart is just very, very tough to read in terms of what to do, because it doesn't make a whole lot of sense. Why would it rip from, what is this, 30 to 77 and then come back down to 26? I mean, it looks like there's a lot of two-sided action here. Looks like there's room to like 50. I would be very cautious at 50, but if it tries to close this gap here, let's see, Roku earnings February 20th. So you got some time on that. I would try to see if we can hop out, if we go on a hop on board to get to like 50 and then kind of reevaluate. And if we could do a gap fill, maybe maybe at 50, I would do like a strangle play and see if I could do something in that area. Cannabis stocks. I was trading CGC for a little while. I'll still probably look at it. You know, it has some good volatility. Options pricing on CGC is not that crazy. However, charts just don't make it. The charts don't make any sense because they move on political events and laws and stuff like that, which I typically am not a fan of. But it's there for the taking. What do you look for in trades? I guess it depends. I guess it depends on what kind of market environment we're in, Eric. But typically, I like to trade. My favorite trades are support and resistance trades. So trading off of support, trading off of resistance. You make more money trading off resistance, though. What are your thoughts about Microsoft? Microsoft went down on earnings too. Yeah, this has been a tough area to make money in Microsoft. You know, it didn't crack this 102 area. If it does, you know, it's kind of sitting here where it's bounced in. So it's in bounce territory right now to like 107, but there's not a lot of juice to squeeze here. But if you're looking at, like, if you're sitting back looking at the long term here in the 1 year, I mean, this definitely looks descending here. You know, any way you look at it. Yeah, cannabis just kind of does what it wants. I agree, Josh. Rock and roll. Yeah, Tesla's calls, regretting it immediately. Yeah, I had a 200% win on Tesla today, but I didn't really go over my trades just because there was a lot of stuff I wanted to talk about today outside of my trades, and hopefully, I don't know if do you guys like these kind of videos, like these monthly recaps where I kind of evaluate where I've been, where I want to go. I don't know. Let me know in the chat. Marcus, Foot Locker. I don't know. Do those even trade options? What's their I don't know what Foot Locker's ticket. I don't think I've ever traded Foot Locker. Foot Locker stock. They have FL? Okay. Okay. Foot Locker, let's see if they trade options. Looks like they do have options, but there's like no liquidity on the weeklies. Monthlies, no liquidity. So I wouldn't trade options on this. I mean, if you want to trade the stock, you could trade the stock, but definitely looks very toppy up here for sure. But there's not really any options. Class AI, appreciate you, man. Good info, Nick. Right on, I agree. I'm thinking my puts will ride. Nice, Mike. Chet and BAC. I think BAC goes back to 29. Yeah, this like, you got to be careful on charts like this. This is definitely on Bank of America very, very misleading. Where it gapped up, but it's also still kind of in range here, where it's bounced off of 28. It did bounce off 28 here. It ultimately did go lower today, not by much, like 9 cents, but yeah. I'm not understanding right now. I'm not understanding the bank moves. The banks are moving lower. The stocks are moving higher. Very, very mixed messages. And and I think outside of Bank of America and Goldman Sachs, the banks didn't do very well in earnings. Outside of Bank of America and Goldman Sachs, those are the only two banks that really did well. So this earnings season definitely has been interesting. I'm actually looking kind of forward to earnings season being over. Tobin, appreciate you, man. Thank you. I actually like the vids, helping me move forward, moving forward, even if things stay exactly the same or need to adapt. Billy, I did post on Discord my trade. I have a channel on my Discord called Nick's Trades, which you can review my trades at. I posted my trades in there. GLD is moving up. Yeah, so I don't know. There's a lot of mixed messages right now. So there's a lot of mixed messages in the market. I say we just trade careful and just go slow. The market's gonna. I feel like the market's gonna change again soon, but I don't know when. So if you're not sure where the market is going, it's best to kind of like go slow. Just go slow. John, I'm enjoying your group. Thank you for all that you do. Checking out a lot of your first week option traders trying to get paid on the Discord. Nice, John. So I'm going to sign off for the weekend. You guys have a safe weekend. Let's kick off February. Let's kick off Monday. Let's get back to the green. January's behind us. I know today's February 1st. January's behind us, but you gotta take care of your mental stability too. Take it easy. It's going to be 50 degrees here a couple days, I think, but then it's going to go back down to negative. So we'll take what we can get. So you guys have a great day. It's always us versus Surge. Stay safe. Stay green. You guys take it easy.